Hello and welcome to this video module on SEC filings, the S1 or stock offering. We're going to take a look at how best to extract information from an S1. As we've done with the other SEC filing modules, we're going to start by going to the SEC's company search website, and we're going to focus on a consumer products company that had its IPO in 2010, Vera Bradley. Our goals while reviewing the S1 are to get a really in-depth business description in terms of products, channels, marketing, competition, and we're going to see how the S1 is a marketing document but also heavy on disclaimers. You'll see a lot of the same information in the S1 as you will in subsequent annual reports. That shows that a lot of work went into compiling the text and the images and the framework for the S1, and that was done by the banking team, the legal team, and company management during the IPO process. We'll also see some pre-IPO historical financial data, which could be useful if we're examining a company, as we may want to look at growth rates or historical margins or historical balance sheet metrics. And we're also going to need to pay attention to the use of proceeds from the offering. It's important to note how capitalization will appear post-deal and how pre- and post-money valuations differ, and we'll go into that once we open up the document. Let's flip over to the SEC website. Just going to get back to the search page, and as we've done in the past, we're just going to start with our ticker, and we're going to look for an S1. Now I know this company went public in 2010. It's often useful to look for one of the most recent S1s, and a company will file a series of them around an offering. That's because they're making edits to the document and the SEC may be requesting certain edits. So I happen to know that while this was first filed, the initial S1 was filed a few months before, we're going to want to look at this particular S1A, A just meaning an amendment, that was filed October 19th of 2010. And you can see it's called, actually we're going to grab that one there, same date, amendment to form of S1, and we've got our document, SEC, form S1, company name, and one of the things that's going to jump out at us is this red font on the front page. This would be the cover that somebody would see if handed a physical copy of the IPO document, also called a prospectus. Those with this red font are called red herrings, just playing on the red font on the cover there. And it's basically to call out that this is not yet a final document. You can see the text says subject to completion, and some of our fields on the cover are blank. They basically haven't yet priced the offering, and in this case they're going to price it on the 19th or the 20th of October, and it says the common stock price is expected to be between $14 and $16. We don't actually need that data just precisely just yet for what we're going to extract from this document, but we will be able to see the final price in a subsequent filing. So let's just flip through. Again, we said that this is a marketing document, so a lot of care went into choosing images. This will be out there selling shares for the company. Like we've seen with the other SEC documents, we've got a table of contents with hyperlinks. I'm just going to direct our attention to page 7. There's a whole bunch of summary info on the company, but page 7 has a summary on the offering. And this is important because it tells us that common stock offered by the company is going to be 4 million shares. Common stock offered by selling shareholders is 7 million shares. So we do need to note that those sold by the selling shareholders will not be proceeds, cash proceeds to the company. The company is only going to get cash proceeds on the 4 million shares that it sells. Those other 7 million are basically just going to be transferred from existing shareholders to new shareholders. So basically very negligible effect on the balance sheet, maybe just some fees. So while there's 11 million shares offered, only 4 million are going to affect the capitalization table. And this is a very important number for us to see, common stock outstanding after the offering, because all the financials we're going to see in this document are going to show the pre-deal numbers. So it's going to show about 36.5 million shares, and we need to, when we say at the level at which the company was valued in the IPO, post-money, we need to know that it's got 40.5 million shares out. And you can see there's a little text on the proceeds. I wouldn't trust this just yet because as they note, they don't know the final price. It also gives us the stock ticker for the company. Next I'm going to point your attention to the risk factors. So we see they start on page 8, and I'm not going to bring us through all of them, but we're just going to scroll through. There's actually 10 pages of risk factors. This is the company kind of covering its own liabilities here. It just wants to make sure that it's not duping anybody into buying this stock. So they're just going to try to lay out every single possible risk they can think of. A little more info on page 20 about the use of proceeds that just kind of supplements the stuff that we saw on page 7 above. Next thing I want to direct our attention to is page 26, the MD&A. We saw this in an annual report, but this is the company's first version of it. The IPO document would precede any annual reports, so you can just get a feel for how they lay out their description of their financials and how they call out changes that have happened year over year. And I just want to next direct our attention to page 44, where we do see, and I know we talked about this in the 10K, 10Q, and I think even the 8K module, video module, but we do want to note the income tax idiosyncrasy with this company. The company, as we noted earlier, changed from an S Corp, basically a company that allows income to be passed through tax-free to its shareholders. It changed to, it will automatically convert to a C Corp, they note, which is what we think of as the more typical form of corporation. So a C Corp has taxation at the corporate level, and then if it does distribute dividends to shareholders, those are taxed again. But that's going to play into effect in the financials when we look at those. So let's just take a quick look at 46, because the company here is telling us, the company and the bankers and the lawyers, how they came up with the stock price at which they hope to value it. In reality, they did it a bit based on what the market would bear, but they're also telling us that they did a valuation, and they did a DCF methodology. They used the DCF methodology, and they also did a market-based approach, basically the comparable public companies, both major valuation techniques that we examined through our textbook and through this course's earlier modules. Just going to flip down to 59, where we see a little information about who the company considers to be its competitors. It names a few companies that compete in the branded handbags and accessories space, such as Coach, Nine West, Liz Claiborne, Dooney and Burke. That could be useful if somebody was doing a comparable companies analysis and wanted to think of other companies to analyze. And lastly, we're just going to go down to the financial section of the document. So it actually follows the numbered pages, and we'll get into some pages that start with an F, F1, F2, and so on for financials. So if we flip down to the balance sheet, we'll grab some of the key numbers that we need for evaluation work. We want to look at the latest balance sheet. So in this case, it's July 31, 2010. We can see a cash number. Now, we look at our debt and 140 million, and we know from, if we read earlier in this document, that some of that, actually much of that, is going to be repaid through this offering. So we do need to adjust that number to reflect the proceeds of the offering. Next, we're getting some income statement info, and they're giving us 6-month info through July. So we're going to use these two numbers, 2010 less 2009, to do an LTM calculation in our revenue line and also our EBITDA line. And you can see that the company is giving us pro forma for that change in the tax policy. You see the income tax provision of 10 million on 25, much more normal than seeing virtually no taxes. Next, we have 6 months of cash flow data, where we would grab our depreciation and amortization numbers. And if we scroll down a bit more, I bet we're going to get to some annual numbers. So we have an annual balance sheet, but we actually don't want to use this because we're better off using that 6-month one, more relevant. But we will use the annual income statement for calculating our LTM numbers, so using that January 30, 2010. But like I pointed out in the PowerPoint slide, it gives us a great glimpse of some historical data as well. We could see basically the year ended, and they're kind of normalizing the year for the change in year end, but year ended 08, 09, 10, and so on. So that covers the financials. I do want to actually hit the back button and show you what the definitive proxy looks like. So we used this one from October 19th, 2010. What you want to do is then look above. You'll see something that says effect, which is a notice of effectiveness, and that there's really no info in there. But the document file just after that says prospectus 424B4, and you'll just see it come up as the final prospectus. This one, unlike the red herring, will not have the red info, and will have the final share price. So you can see this company went public at $16 a share. And if you follow that through, you'll see much of the same info, but you will not see any blanks because we now know what the proceeds were. Now, also want to go back again and note we're scrolling up towards the present, and look, we see another S1, S1A, effective, and a 424B4. So what that tells me, and I can confirm it with some news searches, is that this company probably did a follow-on offering. Companies who have successful IPOs, hit their numbers after the IPO, and have a strong stock price after an IPO, often go back to the public market to offer even more shares. So what we could do is we could open these documents, and as we did before, once it loads, we're going to see that we've basically got a preliminary prospectus first. So we've got this would be a follow-on offerings red herring. So it says subject to completion, and again we have some blanks, but they know that they're going to offer 5 million shares, but this is from selling shareholders, so not from the company. The company will not receive any proceeds from the shares of common stock. So just a transaction for us to note. As the company's not receiving any proceeds, it doesn't really affect the financials in a meaningful way, maybe just some fees. But just wanted to show you that an S1 is not necessarily an IPO document. It is a stock offering document, and that's how we extract information from it.